All right, thanks, Scott.
Yeah.
Hello, Andy.
Hey, Steve. Hey, Scott. How y'all
Was
doing?
it last week I was flying solo without you? Were you in Atlanta last week, or was that 2 weeks
No,
ago?
no, that would have been 2 weeks ago.
Okay.
Yes, yes.
Seems like it's been a while since you and I have done a webinar. I don't know why, but nonetheless, thanks for showing up, everybody. This is our Trade of the Week Tuesday regular webinar in the series. Typically launching at 5 p.m. Eastern, Monday, Tuesday, Wednesday, Thursday. I'll show you more about that in a moment. But real quick, just to get the disclaimers out of the way, just please remember this is a webinar intended to show off the capabilities of a technology. I may even talk about a couple of ideas and personal opinions, but anything you see in here should not be construed as investment advice. If you need investment advice, you got to go seek out the guys who studied long and hard and took the tests to learn fiduciary responsibility, and they're going to be your best bet. But we have nothing to do with that. We are a content provider, software as a service provider. Just want to make sure nobody is misconstruing that this webinar has anything to do with financial advice for people. Please seek out your own advisor. Everybody has a different situation. So as I mentioned, the weekly webinars, Monday was yesterday, myself and Jamie. Today is myself and Andy. Tomorrow is Dan and Brad, talk about upcoming technology advances in the platform and whatever else Dan feels like talking about. Then Thursday, Jamie and Andy takes the helm again for the trading studio. And then Friday, 3 months ago, we added this new support session. So 11 a.m., 2 p.m. Eastern, a 3-hour open, come one, come all. It's a great place to start off if you just signed up this week and you're still waiting for a one-on-one session. You've watched the YouTube video and you're looking for more information. Come on by on the Friday support sessions. We fill the full 3 hours pretty much going over your questions. And of course, your questions can always be educational to other people as well who may not have thought about asking that question. But we do make ourselves available to you. The one-on-one sessions that I briefly brushed over, it's not on this slide, but Scott is going to have a promo code for those of you who have not signed up yet. And just be aware that it's a $99 value that people actually do pay, but you get the first one free. So if you sign up and subscribe to monthly or annual, you'll get a 1 month, 1 hour free one-on-one session. And again, like I said, that is a $99 value. So when you consider the discount code Scott's going to have, and knowing in your first 30 days of subscribing that you're going to get a one-on-one session, it's a pretty good deal to come in and kick the tires for the first 30 days. And I know a lot of you would know within 30 days whether or not this program is right for you or not. Lori, is there a link to the support session? Maybe Andy can drop in the webinar link for you. All you got to do is sign up for our webinars, and you will get daily reminders of this webinar, and in the same fashion, you would get a reminder for the Friday session. So looks like Andy's helping you out there. And last but not least, the trading room. Barry Anderson does a wonderful job during market hours here in the live Trade Ideas trading room. Got a handful of really good traders in there as well. It's a great community, and best of all, it's free. You don't even have to be a member or a subscriber to Trade Ideas. So a lot of people do come in and just kind of start by, attending the Trade Ideas live trading room, get a feel for what they're looking at, what the technology is, and so it's a great place to start as well. So for all those reasons, we really pride ourselves on the customer support and the onboarding of getting you guys up to speed as soon as possible. And we feel that has certainly a lot to do with the parabolic growth of our net subscriber growth since 2016 when we first introduced the AI Holly. We already had a little bit of momentum going from our other fantastic tools, but just a real parabolic growth curve since then. And trust me, we've had to hire people to take on the onslaught of the new people that need help in the customer support arena. So thank you all for making that graph subscribers look as well as it does. Quickly, Interactive Brokerage has partnered with Trade Ideas. We've been in beta for a few months now. If you happen to have an Interactive Brokers account and you happen to have a premium Trade Ideas subscription, you're actually eligible to just connect that account with Trade Ideas Premium, but be aware it's still in beta. We're still trying to work some bugs out, and I must preface this. This is an intermediate to advanced tool. So somebody who just learned to trade a month ago really should not even be concerning themselves with this. What they should be concerning themselves with is learning how to adjust at the data flow that's coming at you and make sense of the fire hose of data, as I said, and see the forest through the trees, and start to understand some of the methodologies and some of the ways in which you want to proceed as a trader, and then try to incorporate those methodologies and scans and strategies into an automated fashion. So in other words, what I'm saying is if you're a newbie trader and you just come in and borrow a couple scans from somebody and connect real money to IB, it might be a tough going for you for the first couple months for sure. So please remember this trade, this brokerage plus product will soon come out of beta and will become a real product package, but it's really for the intermediate to advanced. You know, learn how to walk. I'm sorry, I always mess that up. Learn how to crawl before you walk, and then learn how to walk before you start jogging and running. And I would equate this tool to jogging and running. So just a little bit of being aware. And before we get started, the theme of our company really is a Paul Tudor Jones quote: "No man is better than a machine. However, no machine is better than a man with a machine." And that's what Trade Ideas is. We are the machine, and you all traders, you all are the humans, and you are the ones with the discretionary decisions to use the machine as a tool alongside with you. So that quote definitely rings true. Agenda for today, November 7th, pretty similar to most of our Tuesday webinars. Go over a market recap. I have a couple thoughts about what happened today in the market. Holly recap, but we definitely have some positive thoughts on what Holly did today. The trade of the week did not fire, but we will talk about it, and we'll visit how last week's trade of the week is doing as well, and maybe look at some risk management parameter levels on last week's trade of the week, which was KWeb. Going to go over the sector review. This market is in constant rotation, handing the baton from one sector to another in just a constant, continual flywheel type of momentum in this market. It's the way it's been trading. And then we always do like to spend the last 5 or 10 minutes going through some chart requests. So hold on to your request for the moment. If you're thinking about a chart you want us to look at, let's wait until we ask for those before the end of the session. We'll take 3 to 5, time permitting. It always helps to know if you're long, if you're short, if you're thinking about getting in or thinking about getting out. But we'll do our best to give you a couple extra pairs of eyes and about 45 years of experience of reading charts to try and help you all out when we get to that point. All right, so let's move forward. Go ahead and minimize that, and we will start off with our usual market recap. And I will start with the SP. Okay, the spiders. I mentioned last night in Jamie's webinar, this trend line always seems to get goofy on me, but this trend line was so money bouncing off the trend line all the way up for the most part. And back here was where I actually, mea culpa'd, got a little bit short and quickly flipped my hat back long again because there was no follow through. And I said if it didn't, I would turn back around. So a false alarm from me on that one. But again, the redeeming quality is not fighting it and staying short up here and staying short up here and saying, I know the day is coming. No, we got to just work with what we've got, and the footprints and the technicals basically got me out of the short camp only a week in there down here as it broke the trend line. So the point being is the trend line is still intact. If anything, we are way above the standard deviations of the trend line. We could be due for some sort of a pullback at some point. I don't know when. I do know it's been about 245 days or so since this market has seen a 3% correction. Very unusual. So, hold on to your hats. I don't know when it's coming, but when it does, it might be fast and furious. But the S&Ps finished the day barely negative. Let's take a look at the intraday S&P action. Where are we on the intraday here? A bit of a pop on the open, and then a dastardly slide for a few hours into the lows, and then a bounce back up, and then just kind of choppy action for the whole day. Take a look at the Qs. Tighter range in the Qs, however, they did finish positive, just barely. Let's go back to the Qs daily. Same sort of thing. This trend is definitely intact. The recent last 2 weeks are even getting farther ahead of probably a lot of people would have anticipated. I think I saw something on Twitter. We're only 105 points away from Goldman Sachs's 2020 S&P 500 target. So we're moving higher really quickly, guys. And, we'll see what that portends. But for the spiders and the Qs, path of least resistance remains up. I mean, there's no real alarm bells going on. Look at the Dow and the diamonds. Again, another nice buying wick on the close. Buyers stepping in, giving us these back downside wicks. So 3 out of 4 indices looking super strong, if not too strong, like they could use a shower or use some sort of a break. But then we get to the IWM, which I've been talking a lot about lately. And something interesting happened today. If you were tuned into yesterday's webinar, this green line was blue because we had 3 instances, 1, 2, 3, where the IWM tried to penetrate that level, which we'll call 147.50 or 147.40 for lack of a perfect number. We bounced 3 times off of there, handily. And so I went ahead and drew the line yesterday in the webinar and said, price alert set. If we break that line again and bounce back up, well then, geez, just what another wonderful stick save, the market kicking the ball back into play. But that didn't happen today. The IWM is starting to concern me just a little bit. If we consider that the rally we're seeing in the Qs and the diamonds, Dow, primarily on the big cap stuff, because when we look at the small cap stuff, they've spent the last month and a half trying to figure out what exactly they want to do as a group. And, from my observations and Andy's observations, we're not seeing a lot of big small cap stocks, ripping to new 52-week highs lately. It's been some of the more familiar names. The IWC, which is a sub component of the IWM, it's the micro caps. Micro caps haven't even been able to go hold sideways. They've been actually downtrending the last few days. So what I want to talk to you guys about today, cautionary flag number 1. I've said many times these levels can hold and then the price bounces back up, just like they did the last 3 times here in the IWM. But today it's a little different. Today we closed below that line. The line triggered on my price alerts, and I thought, well, we're just going to bounce right back up into play like the other indices are doing, but they didn't. The Russell 2000 IWM small cap stocks closed technically weak. I say technically weak because they closed below this pivot line. How do I know that's a pivot line? Well, let's take a look at the intraday. Here's the same line transposed from the daily chart. Here's the first test this morning, bounced off of it, rolled back over, and plunged through it. And what happened after that? Well, our support, in effect, became our resistance. So this line now at 147.40 in the IWM is a major pivot level in my book. Now, there's nothing to say this crazy market can't just pop back up tomorrow and the IWM closes back up here like nothing happened. But I am going to raise, like I said, just a little bit of caution here when I see one of the sectors out of the 3 not participating. All right, I'm going to get a head start on this because we're going to visit this later, but here's cautionary tale number 2. Financials. I don't know if anybody caught this today, but this is a whole sector. There's your financials. That's a pretty ugly candle. Yes, it filled the gap. KBE, our regional banks, blew past their gap and closed even uglier. The KRE, the regional banks, even uglier. Okay, what's going on here?
Wow, that's like almost 6 weeks of take out the lows,
Yeah. Well, what about Citigroup? Not a great day. What about BAC? Not a great day. I haven't even seen Wells Fargo. I haven't looked at it. There you go. So guys, it's a little bit of caution again coming up because, typically, there's nothing typical about this market, but in the Trader's Almanac, financials are typically the best group to lead rotation and to lead the market. And what we had today in financials was an absolute drubbing across the board. So that's one thing that I did take note of. XLF, I think it is one of the uglier closes it's had in a while. So keeping an eye on the financial sector is one little cautionary flag I'm watching, and then the IWM is the other. But when you match it up next to the Qs, which can do no wrong, it's about as strong of a chart as you can get. Again, the only thing I can say poorly about this is it might be just getting ahead of itself, might be getting ahead of itself too quickly, and may be in need of a pullback. Now, that said, I guess we'll just go ahead and move on. That's really all I've got to say about the markets. Anything that you observed that I may have missed?
Oh, you covered it pretty well, Steve. I mean, we throw these red flags out a lot of times, and for you to keep an eye on, of course. But at the same time, there has been this rotation we always talk about, and my theory is, as long as there's free money out there, and until these interest rates really start going up, and I'm not talking about one raise a year or two raises a year, until we see some, a major impact, and we start getting up somewhere close to normal interest rates, this money is just going to, I'm afraid, just continue to flow into equities, and you're going to see these rotations. So, but at the same time, that was a pretty good sell-off there in the financials today and the IWM. So I would be on my toes for sure.
Yep. Yes, sir. This is a free money market. Until the free money ends, we have a market that just doesn't want to go down. And that's okay. It is what it is. We can argue with it, but it doesn't get us anywhere. All right. So let's move into Holly. I'll talk about a couple of observations and then turn it over to Andy. But observation number one coming in today, what's the first thing I do? Well, I'm up late enough in the evening on the West Coast. But in the mornings, I take a look and see what's on the docket here, what's on the starting lineup. And it doesn't take a super observant person to notice something. Today, based on back tests last night, the night before, the week before, Holly came in today saying, I see no reason to put a single short strategy on the bench to put in the game today, all right? It is what it is. You disagree with it or you can agree with it, it doesn't matter. But this is what the AI came to the party with today. Nothing but a long-sided bullishness. Now, I will add to that, after today, with the IWM and the XLF, I kind of really hope, secretly hope, Andy, when I wake up tomorrow, that I see at least 2 or 3 short strategies in there based on some of the weakness that happened today. So again, it's going to be a completely different lineup tomorrow. But I would really kind of hope to see that maybe we have some shorts in there as well, because guys, I don't know, I'm sure Andy's going to put it in proper perspective for you. But what happened today, I mentioned it to Andy, I said, this is like Serena Williams playing a tennis match with just a forehand and kicking the butt of her opponent. There was not a single short on a day when the markets were selling off, mind you, midway through the day, and a lot of, especially IWM, of course, and even the Qs. There was a lot of midday weakness that popped into here today, and I thought, boy, this is just amazing that, Holly at the end of the day was able to book $2.16 on the ins and outs that the AI triggered. The risk on category was a bit less at $1.14. Now it was up over $3.50 at one point, but some of the sell-off towards the end of the day, a lot of those trades kind of lost their luster. But on a day like today, where we just had more back and forth, a lot of choppiness, I was really impressed and surprised, I will tell you, to see that Holly came out swinging with just her forehand and only her forehand, meaning a metaphor for only going long, not taking any shorts, because there have been a couple of decent shorts in the last week. But very impressed that the AI was able to take a nothing day with really nothing going on in the major indices, green to red, back to barely finishing green at the end of the day. And typically those are going to be your risk off type days, the days where the exit time works out to be better than the holding of the all day. So again, extremely impressed with the net result, the fact that the AI was able to do all of that, only going long. So that was my big takeaway. What do you want to throw in there, Mr. Andy?
Oh, I definitely agree with you, Steve. I was impressed with her. We all should know. I know Steve and I both know. We day traded for many years, and this can be a very difficult time to you had that sudden move up, kind of sucker a lot of people long this morning in the market, and then pretty much a downtrend all day. Little recovery there at the end, which we often see. But yeah, to finish up, 2.16 on the risk off. Was really I'm sorry, I'm trying to halfway talk and read this, read somebody's question over here, and I do want to address this question before I move forward. And Bill, you're right. You will see some lower float stocks, that come through Holly. I think if you'll notice, if you look at the relative volume coming through in a lot of these, you're going to find they're at extreme volume percentages based on what their normal volume is. So you're rarely going to see us take a, Holly take a throw an alert out there that may only be doing, 50,000 shares and it doing less than relative volume. So it can make it a little bit difficult, but at the same time, I've seen this work both ways for you and against you. I mean, sometimes it's on a pullback alert and the alert will fire off and I'll see the price go down, 10, 15 cents lower to give you a better, feel. And in some cases, yeah, they just kind of get away from you. But I think it all kind of averages out in the end. Let's use SBOW for one to talk about to begin with. Now, the average daily volume, yeah, it looks anemic, but when it came through this morning, the relative volume, I believe, was up there around 13 or 14. It was doing huge relative volume. Yeah. And you can see it finished the day at 170,000 shares, which is tradable.
Yeah.
I'm sorry, 167,000 shares. I was looking on your daily chart. It looked like I saw 169. But so nonetheless, that's what you're going to see. You're not going to see us, averaging, 30 or 40,000 shares and it doing lower than relative volume. Because if you do, I would agree with you that is too light to be trading. Okay, Bill, I'm glad you got it. So
first thing I do, Bill, is I look at the 5-minute volume, the 1-minute volume, and the relative volume. They're all right here in the upper right quadrant. And when this thing came through today, we were talking values of like 1,000. Right, Andy? 1,000, relative volume 13. So in a sense, yes, it's a stock that may be kind of sleepy. Typically, looking at this chart, I can almost kind of tell it's kind of wicky and sleepy. But on a day like today, when it's doing 13, 14 times normal volume, it's in play. And to your question about slippage, oh yeah, there's going to be slippage on these trades. Sometimes you might have to reach up a nickel to get something. Sometimes you might get a better price than Holly gets, especially on some of the pullback alerts. They might pull through 5 or 10 cents, and you might find yourself having actually a better entry. But in the end, it does come down to the discretion of the trader and the comfort level of the trader. I highly recommend, if you don't have one of these single stock windows, the first thing I do is double click into it, check the relative volume, check the volumes, and see what's going on. And it is a nice little side tool to kind of help the discretionary trader make those decisions on, questionable, maybe wider spreads or volumes that you might not be as inclined to play. What you could also consider doing is you could look at something that you think, oh shoot, maybe I just missed that by 10 cents. Well, I've seen a lot of Holly trades back up again and come back to the point of entry. So you could always put a limit bid in there on your broker and just let it sit. If it gets hit, great, you're in at the same price if you wanted it. If it doesn't, well, pull it, so on to the next trade. Every day we've got a whole new basket of opportunities. But the opportunities being shown here were certainly not being talked about on CNBC today or Fox Business or any place else. I think the real value of the AI is we call it alpha fracking, fracking through the cracks and finding unknown names and unknown scenarios that we just are not necessarily looking for. And every day there's 4 or 5 trades, or I shouldn't say 4 or 5, there's a handful of trades that's like, wow, I would not have known about this chart had I not seen it. And then, as we move forward, if I click my little heart thing here, you guys notice you don't have these on your screens because this is a developer's version. But coming soon, we're going to be able to say, wow, SBO, I didn't realize that chart existed. I want to keep an eye on that one. Rather than going through the litany of adding to symbol list and favorite, the heart button is just going to be one single click. You liked it, and it's going to throw this symbol into a receiving window that'll keep track of all of the stuff that you've liked. So makes it a lot easier for the users to just kind of go through and say, oh, that's interesting. This K, look at that. Look at how it came right down here and filled the top end of that gap. And now it kind of held up today. I might want to keep an eye on this one. Maybe I'll put that one on my heart. So I'm kind of showing you guys 3 weeks, 4 weeks down the road, some of the workflow that could come into play as we discover new symbols that came through Holly. Sorry if I stepped on you there.
No, that's all right. Not a problem at all. While you have K up, that was going to be the next one I talked about, because now you're talking about a stock that averages, 4.6 or something like that? Yeah, 4.6 million shares. So this is much more liquid. And look at that today. Go ahead.
Well, I'm sorry to do that again, but yeah, and there's our arrow, 15, 30, 45. You had a lot of time to decide whether or not you wanted to maybe even get a better price than the blue line showed, because for a good amount of time, the price was trading below the initial pop that popped through and then pulled back. And then we stayed underneath that entry level for 45 minutes before we actually did get the move. So it cuts both ways, but we definitely hear your comments, Bill, and those are valid comments.
Absolutely. But yeah, that's a prime example where you could have gotten a better feel for that. That is on the strategy bullish trend change. So that was one that went off, and you would have had a great opportunity to pick it up at a better price.
Real quickly, correct, Wilson. I'm on California time, so everybody else, you guys' local machines have your local time. These are West Coast entry times. Good observation. Good question.
Mm-hmm. Very good. Another one I wanted to look at. It doesn't. The risk off didn't finish all that great. Only up 13 cents, but I thought it was a beautiful trade, and that's Riot. That RIOT. Mm-hmm. There's one where basically you have, it's another quarterback entry, so the price kind of went through. I would anticipate that it went through the high of the day and then pulled back and gave you an entry right there around
the same candle. Yeah, if we I bet you if we go to a 5-minute candle, we could probably see that more clearly. Mm-hmm. Yep. Let me zoom in. And that's still a 5-minute.
No, but you know what? I guarantee you it popped through and then came back.
Yeah.
And another good example, it averages 513,000 shares a day, but look at the relative volume on that today, 14 times normal.
So we did over 1 million.
Mm-hmm. So you have a stock not really breaking out on the daily, but at least kind of clearing out of some congestion for about 7-day congestion there, and nice little run in that one.
I'm going to draw the line right there on that daily chart. You can kind of see the congestion that Andy's talking about that marries up.
Yeah, right.
All right.
And I'm looking at that daily. I wouldn't get too excited about how far this potentially can run, because as you look left, you can see there's still a lot of congestion for it to keep it. But it's one I would definitely keep on the radar. Big volume today, and let's see if Steve's going to mark it up right there. Maybe you put a price alert right there, and if it gets through that area, more than likely it's going to make an assault on the 10 level and possibly through it. So other than that, Steve, I'm trying to think. I think the overall theme of how she performed today is more important than breaking down each individual trade. There were some great ones in there, but the way she managed them and got out in a market that was primarily in a downtrend all day, I thought was the risk-off exits were incredible.
See, I kind of like this one, not because of the cute name Elf, but because it kind of mirrors that 3-day bounce where we've had some consecutive candles down, and then we had a nice green candle up. And for the whole day, this thing really didn't sell back off and go to lows. It was relatively strong considering what the rest of the market was doing. So this one could have a little meat on the bones for next maybe 2 or 3 days. Could be an interesting swing entry. So I'm going to go ahead and heart that one up as well.
Of course, I have a hard time taking a chart serious that have the word elf in it and a heart on it, but
Elf and a heart. Well, I do love Elf. It's a great movie.
Oh, it is a great movie.
I just have to do a humble brag here. My quarterback strategy that I fed to Holly had a really good day. Even if we go up here to the parent window, quarterback just killed it. 4 trades, 3 out of 4 were winners. $1.06 risk off, $1.33 if you took them to the end of the day. I love this quarterback strategy, and I'm not just doing it for a humble brag. I'm just trying to highlight what some of the strategies that have been really working well lately. So if you all see something come through and you halfway like it and it's a quarterback strategy, well, just know that this one's been doing pretty well lately. That's all I would say there. Okay, a couple things before I move forward. I want to give maybe a couple of trade ideas. You all know that I really like this new 3-day bounce, which is basically, we'll get to K-Web in a minute. This is where we found K-Web, the trade of the week, 2 weeks ago. But what it is looking for consecutive down candles with a nice reversal and a nice tail. Verizon, big company. I mean, this is the kind of thing that we would show to an institution. This is not a day trading stock. This is a big mover. And it came through a few times. Actually, it was the only one that came through today. So I kind of think that, going to highs just like that today and creating a price alert, I'm going to call it 3-day bounce, set it and forget it, and see tomorrow if it wants to trade any higher through there. So Verizon is one that I kind of liked. The other one I kind of liked was JELD. This one had earnings this morning. How do I know? Because everything I need to know is on the single stock window. Earnings date 0.25. That means that it had earnings this morning, and of course I went online and double checked, went on Twitter, double checked. So earnings are behind this one. It's not in front of it. This is another interesting looking washout. If we look at the daily chart, we can basically see a lot of people probably put their stop loss orders below that line, that pivot line, and they got stopped out on the open. There it is on the open, the big washout down, and for the most part halfway to all the way back. And then as the stock creeps higher, the trigger towards the end of the day triggers when we make a new 5-minute high, and we are within the 95th percentile of this long-tailed stock. So I like this Jello, J-E-L-D. I like the fact that it just had earnings this morning, and everything that it traded today was based off of the reaction for earnings. So I'll probably go into there and do the same thing. 3-day bounce is all I really need to know. I'm going to go ahead and set that one as well. There was one more that's I've been waiting.
You called it. That's actually on the washout bounce one.
Thank you. It's on the washout bounce. So let's do this. Let's go right there. Highlight that. Can we edit? How do we edit the symbol? How do we edit that?
You might have to go into the alert window, but
create price alert. This is the okay. So I might have to go to the price alert. That's okay. I'm going to just leave. That's a minor technicality. Yep. But yeah, the washout bounce is a little different than the 3-day bounce. The washout does not need down consecutive candles, although we did get that today with this one. So again, just the trading philosophy of set it and forget it. And again, I know that this particular strategy, they're both very similar. They both back test pretty well. If you want to go ahead and do a 3-day hold, there's that one. And I can even probably have time to back test the washout bounce since the servers are moving fast. 3.21 profit factor, 133 trades over 60 days. Average winner, $1.12, average loser, 50 cents. That's what we would expect our equity curve to do. And then the washout bounce is pretty close, 136 trades, just under 3.0 profit factor, and almost 3-to-1 here on the average winner and average loser. So until those metrics and back tests change, I'm going to continue to give a lot of weight and credibility to some of these alerts that come through here, and I'm passing it on to you that I like that JELD, and I also like Verizon. Third one that I like, I've been watching for a while, is VMware. This one.
Before you move on to that, Steve, I want to answer Neil. Neil, the question is, it's back tested from when the first time the alert goes off. Okay, so even though he's kind of marking them up to maybe keep an eye on the next day, these are actually back tested from the time the alert, and they're held for 3 days. So
let me give him a better visual here. We go back to the 24th. We had a big day. A lot of them came out that day. So you can actually go into the actual day and start double clicking and look at my daily chart here. The daily chart is giving us the AI markups, the blue line entry, the red line stop, and the green line upside. So when I click into these, if you just count 3 days past the entry, you can start to see that there's some movement there that comes off these setups. One after another. There's another one, but 3 days is kind of the there's perfect example. There's our entry, 1, 2, 3 days, settle at the close, and look at what happens. I mentioned this a little bit last week. It's just, 3 days, you seem to be pushing it. I've noticed it in back testing. I've noticed it in trading and holding things. I've mentioned it even when I say the market has a funny way of going 3 steps forward, 2 steps back. So there is a classic example, Neil, of yes, those were triggered today, but at some point they're going to wind up in the mix here on the database, and we can look and see exactly how well these things did today plus 3 days using the gradients. So if you weren't aware of that, it's a cool feature that.
And you know what, Steve, and everybody else, there's a logical reason for that, why these things are kind of capping. Even all mine that I'm doing for position trades are capping out at 3 days. Because when you have a market that's so extended like this, it's hard to get that extra momentum. You got too many sellers who just cannot resist taking profits, and yeah. We had them back 3 years ago when we were doing this back testing, and boy, we had them out to 10 days, 11, 12, 15. Steve had one for 15 days, I think, and yeah. They did well back then because the market was just powering higher back then.
Yeah.
It's kind of more of a melt up, yeah.
Yeah, and it's just with you know, and we talked about the hyper rotation. You know, one sector doesn't really last very long. When we get a hyper rotation that we've been talking about, we're constantly passing the baton. You know, makes it hard to have one stock or one sector stay strong for more than 3 days. Can you share the washout bounce scan? Yes, I can do that. I'll do it now. Again, they're very similar, both looking for washout candles, but a little different nuances in each. So I'll go ahead and save and share, and what I'll do is I'm going to drop this into the chat window on your GoToWebinar toolbar. And this is called the washout. I'm typing washout bounce and putting in the code so you can receive that code on your own. All right. Okay, for the third time, I tried to get to VMware, and this one is off my squeeze me alert. Take a look at our handy dandy thumbnail data points. Okay, earnings, we still have 7 days to earnings, so a little bit of cushion there. Short float's 35%, still a high short float on a stock that is heading to possible new 52-week highs. This thing has just been a mother. Look at what happened back here when it broke to new 52-week highs and probably had a short float of like 50. Well, it's still working it off, but that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 up days in a row. These are the fingerprints of short squeezes. Forget the 3 days forward and 2 days back. When you're working off of a short squeeze, people are in fear. They're getting out of their position based on fear, not on greed. And so we can get some nice movements off of short squeezes while they last. So we hit this level up here, pulled back, came back again today, and we literally just kissed it, I think, to the penny, and then backed off again. And then towards the close, we're heading back towards it. Kind of like, you know, a zombie. Just wants to keep coming at you. So set it and forget it. Blue line back there at today's highs. Take my eyes off it, look at other stuff, but if that price alert window pops up and VMware is trading through that line, I have the extra special knowledge. Well, the first thing I'll do is look at relative volumes, 5-minute volumes, but I have the knowledge to know that this thing has been under a massive short squeeze for a while, and it's still working its way through. Speaking of massive short squeeze, that's basically what drove Weight Watchers most of this year. Weight Watchers was about 70% short the float down here at these areas around $12. Well, it's a lot less now, but it only took about 35 points to wash a lot of that stuff out of there. So, you know, short squeezes can be an excellent methodology. So if you guys want to mark up your charts on VMware, they're about 121.17. We could see an additional short squeeze going forward. Okay, I don't have the quarterback strategy that Holly has, and again, auto trading only works on the strategies that we have. We could auto trade any A window that we have, which is a strategy. We cannot trade the T windows because the T windows don't have a new high, new low, price alert, I'm sorry, a timestamp and a price stamp. These are more handfuls of ideas that we can sort through and set our price alerts on for set it and forget it type stuff. But I don't have a copy of the Holly optimized quarterback. You gonna say something?
Well, I want you to. Why don't you show S there a multi-strategy window? He's wondering if we can like combine strategies into one window ourselves, like the
there it is.
Holly. Yep.
So let me just scroll back a little bit. Yellow, those are stocks going down on high volume. Green, these are stocks going up on high volume. And it's exactly, this is all Andy here. Basically 2 strategies in one window. So rather than building one alert window for up and one alert window for down, you can create an M window, a multi-strategy, and it's very similar to configuring the other ones. You just got to first right click and then select which strategy you want. Strategy number 1 is color coded with green. Strategy number 2, the downside shorts are color coded with yellow, but everything else is the same. If we go into configure, basically see the same thing. We got new highs on stocks that are doing incredible volume, meaning 1,000%, 1.5 relative volume, 1,000% of 1 minute volume, and position in ranges, 10-day range, getting close to breaking out of, 20-day range, also close to breaking out of, and then a nice average volume. So getting back to your question, you would create it by just going new multi-strategy window, and you can start from scratch. But what some people like to do is say, well, what if I want to take my washout bounce strategy and I want to add it to this list? How would I do that? Okay, so we'll go to strategies, and you'll see we can go new strategy. Ah, okay. Well, I don't want to reconfigure it, but we got this thing here called collaborate. So let me just show you quickly what that means. Collaborate, if we right click on the target window and click collaborate, it's kind of like our cloud link. Before we had cloud links, we had collaborate code. So I'll copy all that code. I'll go back into the multi-strategy window and create a new strategy, and I'm going to collaborate it. I'm going to just paste it, and now it's in there. Now we have a third strategy, and now we can go in there and we can configure it. Perfect, everything transposed. The name, washout, bounce, optimized, the alert, new high, 5 minute, and all of my filters basically all transposed into the M window. So that's how you would use a multi-strategy window. I now have 3 strategies in there, but I don't want my washout bounce in there, so I'm going to turn that off by unchecking it. Okay, hopefully that was a good explanation on the multi-strategy.
Right, and you can only, and like Scott told you there in the answer, yeah, you can only backtest one strategy at a time.
Exactly. So if we were to do that, we would go, well, you can't see because it's off the screen there, strategy, extreme volume, backtest. So you're isolating it by doing it that way. All right, trade of the week time. Losing minutes faster than I thought we would here. So back to Squeeze Me, the stock scanner that I found VMware on, which is the philosophy of people that are sitting short stocks going through 52-week highs, along with 30%, 25% other short sellers. You're just asking for it, guys. Probably one of the dumbest things you can do as a strategy is be stubborn and sit short stocks that are making new 52-week highs. Why? Because none of the short sellers with you are probably in the money. They're all starting to freak out, and the last thing you want to be is the last guy in the theater where they start screaming fire and you're trying to get to the exits. That's always the possibility of a 52-week high, because it's going to light up institutions and other people who want to go long at a 52-week high. So you're competing against longs and other shorts trying to cover, and that's why we can get some of these really nice 10, 11, 12-day massive short squeeze moves that don't give you too much anxiety or emotion at all. So GBX is the trade of the week. It was on that scan going into Friday. It was very close to breaking out to a 52-week high. The short float on that one is around 40%, and there's only 27 million shares in the float. The problem is we never got a trigger. And what we're doing, guys, is we're not trying to just get everybody into a trade on Monday morning for the sake of being in a trade. And we're trying to have a reason for that trade to trigger, just like setting it and forgetting it. So in a sense, the trade of the week is a set it and forget it. Well, this week we didn't get a trigger. Now we still have Wednesday, Thursday, and Friday. There's nothing that says this thing can't reverse. And if this thing pushes through Thursday afternoon or Friday morning, the trade of the week is still active, and maybe we'll have one that actually triggers this week. But for the time being, we're keeping you out of a trade by not guessing. Just say buy this thing at the open is a complete guess. We're going to have to wait for a trigger, because once that trigger goes off, again, that's the whole concept. Start putting fear into the hearts of the short sellers and greed into the hearts of the people who want to go long a 52-week high stock. Real quickly, last week, K-Web, of course, came off of the washout bounce, which is something
3-day bounce.
3-day bounce. Thank you. Gosh, I should probably separate these two.
Yeah, yeah.
Twin brothers. But actually, let me just show you something real quick here. Backtest strategy. Since it's going quickly, we'll go ahead and backtest that. But the K-Web came directly off that. I really liked it. Andy really liked it. You know, the washout was obvious. It tried to run the stops of the people out over here at these lows and these levels. We had our consecutive candles down. We had a nice wick and a close near high. Well, we called it out, and it worked. And it's only a point or so away from its target of 60, I believe. So this thing is really working. We'll come back to that in a second, but I just want to show you. If we go back to the, let's see, what day did that close out? 1, 2, 3, 4. So that would have been the second. Let's see if we can find it here. Or was it the third? No, it wasn't that one. Was it the second or the first? I believe. Yep. Okay, so here is the same thing I was showing you guys earlier. Here's our back test, and K-Web came through as proof. And let's double click it and take a look at what that chart looks like. We can get a better view of kind of what happened. All right, so here's our K-Web. there's our entry, the blue line. A little bit of fussiness on the first morning, but the second day popped right up. Third day gap up. Fourth day, so our third day technically would be 1, 2, 3 right here. So the back tester essentially closed it out right there. But what I want to pose to you all is a trading philosophy that says, great, that was a winning trade. Do I want to take my entire risk off the table and risk losing on more upside opportunity? Because remember, as humans, we're wired to fear things pulling back on us rather than fearing that we're going to miss out on more of a good thing. So just consider on trades like these, the 3-day bounce, if you get your move in 3 days, maybe take half off and let the other half go. It makes the emotional ride so much easier. I can tell you that from experience. All right, so again, that was last week. I think, what do you think a good downside level would be for this? I mean, I fully expect it to continue to wind its way up and fill this gap up in here into the target area, but I would say this congestion down here is probably a place you don't want to let lose. It looks like it tried to take out that low and then bounced back up into play. So it looks like 56.64-ish is probably a good place to cut it if you've already sold half and you want to let the other half run, or however you want to play it. It's up to you. All right. Anything you want to add?
No, I agree with that. Our rule of thumb back when we were lead traders for Ditto Trade, when a market gets overextended like this, we know it's going to be on a short leash for us. So in other words, when we do get profits like this, we would always keep them pretty tight. So in other words, if it were me, I would not want to see it go back through 58. But
okay,
but anyway,
yeah, I can see that too. We'll mark that up. Just answering somebody's questions. The details on all the settings of the Holly trades are proprietary, the configuration, and not only that, it changes. 1 week it might be one set, and the next week it might be a different set. But to answer your question, Michael, if you go to the website, we do have a footer down here that'll give you a description, a thumbnail of the AI strategies, so you can at least click into that and get an understanding or print out a PDF of what the alpha predator is looking for, what bond shorty is looking for. So it's going to give you a thumbnail of the strategy or the method of what the strategy is looking to do, but in terms of the actual configurations, I don't even have access to that. I just see what comes through. Even though I made quarterback, the quarterback that I submitted to Holly is probably nothing close to what the AI has done with it. And I'm not even using it. I'm just trusting the one that the AI has. Okay, so let's skip the sectors. I was going to go over some sectors real quick. I think the big takeaway was the weakness here in the banks, the regional banks. Retail also had a horrible day. National banks, steel didn't have a great day, and then of course XLF, we saw that as well. If I just go through these sectors really quickly, if something jumps out at me, I'll let you know. Healthcare is interesting. It's pulled back to a level of support and trying to make up its mind what it wants to do. XLV is healthcare. That could be interesting to watch. Even a break, you could probably even set a price alert. I'll go ahead and do that. XLV above that level could be technically interesting. Technology spider looks just like the Qs. Forget the Qs. KWeb, we've seen that. Spiders, semis, can't stop them. They're part of the technology as well. But again, we're not looking for things that have made 19 up days in a row. We want to be the 20th day in a row to be just in time for the pullback. That's not what we're looking for. Looking for ideas of congestion. IBB is not looking that great. The oil, obviously, with what's been going on in Saudi Arabia, oil and oil service sectors have been pretty strong. MOO looks like it might even be tiring out, which is agricultures, and then the GDX is just barely hanging on to these levels. I'm not seeing a whole lot of like 3-star, 5-star sector setups. Again, that healthcare ETF was interesting. It's holding its pivot level and it's just looking for a reason to maybe break back out. So could keep an eye on that one. So all right, guys, we got 5 minutes. Let's go ahead and take 3. Maybe one more if we have time, but 3 stock symbols, and we can take a look at that and finish up our webinar here, taking a look at some daily charts for people that want to especially request them. And then again, it does help if you're telling us if you're long or short or thinking about getting in, or if you actually have a strategy in mind. Okay, so JP long. Real quick on that question, can you test a strategy where you go long and auto offset the long with a hedge? Yeah, automatedly, we're not that sophisticated to be throwing in hedges into our automations. So that really does come up to the discretion of the individual trader, and there is nothing wrong with hedging. Andy and I all the time used to be long a bunch of stuff in our Ditto Trade account, but we always had a little bit of SDSs going just in case when things started to feel a little bit dicey as a hedge. So I mean, you can consider that, but that would be more of a discretionary one. All right, one more question before we do the. We got room for one more symbol. We got JP and we got GDS. So we got room for one more, and then I'll answer this question in the meantime. Is the 3-day long scan traded all day, or do you take the trades in between? No, as soon as the trade comes out and I've evaluated, the no earnings in the next 3 days and the volume looks good, it's on the radar, and it may even be a half a position and then the remaining half at the close, just to kind of confirm that it is going to close well, because the last thing you want to do is go jumping into it midday, then have it start to roll over on you. So you could consider maybe buying half and then seeing how it closes and then buying the second half at the close. That's kind of how I used to teach people to use the washout bounces. Just make sure you've got some nice confirmation at the end of the day that we do in fact have a nice hammer candle, as opposed to buying it here and then having it close down here. And then we're just long this giant doji with a big long top and bottom wick, and we don't want that. Okay, so JP is a request number 1 to take a look, and there's no qualifier except long. Okay, looks like Holly liked it back here, interestingly enough, on the daily chart. It's been doing well since then. Holdings limited, so it's an ADR, a foreign company. Earnings are coming up in 4 days. Going to have to be aware of that. I don't know where your entry is, but taking an entry at this point would be probably a bit late. I can see that it held the highs going back there, probably why it found resistance there today. 2262, 2262, 2262. You got a great price.
Yeah.
2262. Yeah, you nailed it.
Yep.
What'd you do? Buy it off of Holly's call?
Yeah.
Hold it? Well, 1, 2, 3 days. That's what I'm counting. Do I need to elaborate? We might want to thin it out a little bit, because as we have talked about, 3 days is kind of the extreme envelope of upward movement before you start to get the anxiety-ridden pullbacks. So
now, I will say this: you're in a very, very hot sector. Chinese play. This is a Chinese broker, and I think it may make an assault on that 52-week high there potentially. I think Steve's right, though. If it can't get through that little level of resistance that he marked right there, you might want to be careful. But good volume today. Look at the volume recently. So this is a very hot stock, and there's a chance it's a momentum play. So
this could be a great opportunity. You got a great entry, Jeffrey. I'm sorry, who is it? Yes, Jeffrey. You got a great entry, and you've got 3 beautiful days of profit. I mean, this just might go into what I was saying earlier. You might experiment with selling half, see how it opens tomorrow, and sell half if it breaks below a certain level, and then let the other half run, and you might be surprised at how easy it is to hang on to that other half. But you got earnings in 4 days, so you got to remember that. All right, GDS looking to go long, so no position yet. Okay, I would agree. Going long, here's our nice pullback hammer candle, and then 2 days. So we may be looking for a pullback. What I might consider doing is looking at this little level right here, and you could always create a price alert and call it a pullback alert. And when those fire, you got to take a couple extra steps, a couple extra measures. You want to really watch the intraday, 5-minute, 15-minute, whatever you're into, closely, and make sure that this blue line is holding. Maybe it trades through and then wicks back up. Trades sideways, tries to test it again, and pops back up. Well, that might be the only intraday confirmation you would need to consider that level as a pullback, because what I'm trying to do is identify prior resistance becoming current support. So maybe this goes for another day and a half, and then it pulls back wickedly to kind of where it broke out from. So I guess what I'm saying is, looking at this tail down here, I much would have rather bought it down here and had it. It's obvious in hindsight to say that. I shouldn't even say that. But looking to get in, I wouldn't be buying after the 3-day move. I would be waiting for some sort of a better setup to show up.
Yeah, and once again, another China play. You got another China play that's had a 70% move in basically a couple of months. So even if you are buying a pullback, make sure it's only a pullback and maybe not a top developing, because that's a huge move it's had in a couple of months.
Okay. And the last one, Lori snuck in there, JBHT long, transport. Well, interestingly enough, GBX trade of the week is also a transport. And the IYTs are looking a little feeble, unfortunately. They were looking really strong 2 weeks ago, really strong back here. I was taking note and telling Andy, but all of a sudden they're starting to peter out a little bit. So the backdrop of JBHT is a little under pressure. I would keep my eyes and ears on IYT. Maybe even Werner Trucking, see what some of the others are doing. But JBHT was your original question, and you are long. Okay, so what we got here, it looks like kind of a wedge developing. That's kind of what I'm seeing. So I'm going to mark it up with a little bit of wedge psychology here as to what I'm seeing. Oop. Let me grab that. I'm going to let that little green candle just sneak above there, and then we'll grab another. Whoops, that's not what we wanted. Grab another trend line real quick. So this is what I'm seeing here in JBHT. I'm seeing kind of the price action is painting itself into a corner, and we want to watch that corner very closely. Come on.
I know the feeling, man, fighting those little.
You really got to just slow down and do it slow. So maybe now you can kind of see what I was seeing there. I don't know where you're long, but draw those lines on your charts. That's a wedge pattern, and it's like, you pluck the guitar string and it's back and forth, and each time back and forth is a little bit less volatile, but it's slowly painting itself into a corner here, and it's going to have to resolve in some form or fashion. Earnings date is behind us, so that's good. So I would just keep an eye on that wedge there. Who asked that question? Lori. I would keep an eye on IYT and maybe some of the other players in the industry. Werner Trucking. What are some of the others? Yellow Freight. No, that's not. It's gone.
Oh man, you put me on the spot here.
Yeah, you might want to look up maybe some of the sympathy plays, but technically, on its own merits, JBHT is painting itself into a corner here pretty nicely. So keep an eye. If it breaks above, good news. Do whatever you have to do to try and hold on to that, especially if it closes above this descending triangle part. If we break below this and pop back up midday, well, that's your discretion. But if we close below this bottom wedge, I would be looking to get out. That's my 2 cents.
I agree with that.
All right. One more question, I think, and then we're done. Does Holly give an alert on the stock when she considers buy or sell, or does it just appear when she actually... Yes, there's 2 things going on here, Michael. The parent window is the strategy players. So these are like players on a bench getting ready to get into the game. Today, Got Dough Wants to Go was a strategy that fired nothing. So the AI saw no reason to trigger any alerts in that strategy. But by right-clicking and selecting View All Trades, you get the duplicate window that I have down here. The View All Trades window are the ones that you want to keep maybe on open position. We're closed right now, so there's nothing open. But in the morning, this is what it looks like for me. And if something pops in, I'm going to get an audible alert because I'm right-clicking, and actions are checked to play sound. I've got a sound set up, text-to-speech. So I'll hear a female's computer voice read off a litany of symbols. I know that Holly just got into something if I wasn't paying attention or if I wasn't watching. So that's the trade window you need to watch. All right, cool, Christopher. Thanks for the feedback. And it is time to bring in Scott. Thanks for the feedback. It's still coming through, you guys. Appreciated. All right, Scott, let me get my slideshow back up, and I'll turn it over to you.
Yeah, thank you. And thanks, everyone, for coming. Couple things. First of all, I hope you're all subscribing to the podcast. Just really really easy to do. Just search for Trade Ideas Podcast in whatever application you use to listen to them, like iTunes or the podcast app. And you'll find it and hit subscribe, and it'll be added to your download list. And then you'll have a fresh podcast every Friday with the wisdom of trade ideas. Check out the last one with Dan and Jamie. And we've got a whole bunch of archived ones in there from when we started. I think we're coming up on 43 episodes now this Friday. So add that to your weekend listening. Friday afternoon is when it comes out. We have a discount code for you. So if you use the code AlphaTrades, that's good this month to save 15% off of your first month or year of premium. You can use this on either new subscriptions or to upgrade from standard to premium. If you're doing the upgrade, just go to your account management section of the website. Go to the homepage, click on login in the upper right, click on change my subscription. If you're purchasing, just use the code from the checkout. You get a full hour of one-on-one training with Steve or Jamie or Andy with any subscription. So do remember to sign up for training after you do that. It's the best kind of onboarding. If you have any questions, email us info@trade-ideas.com. Oh, and there's a handout for you in the handouts panel with some of these slides and the discount code. So just go to the handouts panel on your GoToWebinar interface before I close out today's session in a few minutes and click on the blue link to download. But you can follow Jamie on Twitter at QuantBot. Steve is on Twitter at TodayTrader, and Dan is on Twitter at TradeIdeas1. And we've also got at TradeIdeas and some other handles on there too. So shoot us an email if you have a question. Follow us on social media so you stay abreast of everything we're releasing. And we'll see you in the next webinar. Thank you, Steve. Thank you, Andy.
Sounds good. Thanks,
All right,
guys.
thanks everybody. Appreciate it. See you Thursday.
Yep.
Thanks for the comments. Bye-bye.